Hello everyone, welcome to Wealthy Wisdom. In this video, we're going to talk about should I pay off my mortgage early? 8 reasons why. If you're new to this channel, do like and subscribe to the channel. Have you thought about paying off your mortgage sooner rather than later? This is a question that a lot of homeowners have. It's also the most contentious issue among financial experts. According to a recent NerdWallet study of 100 experts, 56% agree that paying off your mortgage as quickly as possible makes sense, while the remaining 44 do not. What exactly is a mortgage? A mortgage in its most common form is a loan obtained from a financial institution to purchase a home, apartment, or other real estate consisting of property and land. In its most typical form, it is a 30-year loan in which the borrower pays out the principal or amount borrowed to the lender each month. When you take out a mortgage, you may usually make monthly payments for interest and principal, as well as property taxes and insurance. Interest rates fluctuate based on current market rates, and how much risk your lender is prepared to take on interest rate influencing variables. The debt-to-income ratio is a combination of the down payment, credit score, and repayment capacity. According to Investopedia, the debt-to-income ratio examines the amount of debt a borrower has in contrast to their income. The maximum debt-to-income ratio a borrower can have while still qualifying for a mortgage is 43%. Lenders prefer a debt-to-income ratio of less than 36%, with mortgage or rent payments accounting for no more than 28% of total debt. What are the benefits to paying off your mortgage sooner rather than later? Paying off a mortgage early has a number of benefits. If you pay off your mortgage early, you will save money on the monthly principal and interest payment. It also makes money available for future investments. Some may argue that investing this money in retirement savings rather than paying down your home debt is a better option. The guaranteed rate of interest saved by paying off the mortgage is compared to the guaranteed rate of interest created by investing the money in this argument. For example, if you can pay $1,000 more per month toward your mortgage principal at 3.5% interest, rather than invest the same $1,000 per month in the stock market at 7%, you will be 3.5% ahead. Here are 8 reasons why you should pay off your mortgage as soon as possible. The number 1, eliminate monthly payments. Paying off your mortgage reduces your monthly expenses by eliminating your mortgage principal and interest payments. Paying off your mortgage also reduces the size of the nest egg you need for retirement if you follow the 4% or the 25 times expenses rule. For example, a mortgage payment of $1,000 per month is equal to $12,000 per year, which would require an investment of $300,000. Number 2 is cash flow and net worth. For most people, a residential mortgage is the greatest barrier to financial independence and the true accumulation of wealth. This is true for several reasons, the most prominent being a tolerance for indebtedness and deficit spending. For example, when we accept a loan or finance something, we are consuming our future income streams. While this can be helpful in making major purchases such as a mortgage or buying a car, it often serves to reinforce the use of debt to purchase things we cannot afford. For example, using a credit card to finance clothes, a computer, or a vacation. In its case, we are using borrowed money, in many cases, to pay for luxuries we cannot yet afford. As a result, we pay more for the items and perpetuate the debt cycle as part of life instead of embracing delayed gratification. Saving and investing to afford our desired purchases without the lasting penalty of debt. When the mortgage is paid off, a person's net worth will increase dramatically as the debt minus their overall net worth is removed. Because of this, the standard recommendation from financial experts is to pay off your mortgage before you retire. The number 3. It accelerates the accumulation of riches. Paying off a mortgage early, for example, is a terrific method to create money quickly during difficult times. This is particularly true during times of high uncertainty since it frees up funds to save and invest in appreciating assets. Because you don't have a mortgage, you may use a larger amount of your free cash to take advantage of market sell-offs, asset price declines, and other favorable investment opportunities. Paying off a mortgage is as much about debt reduction as it is about increasing wealth, since debt removal opens up prospects for long-term growth investments. At number 4 is peace of mind. For peace of mind, pay off your mortgage early. At its most basic, debt removal helps you sleep easier at night, knowing you don't have to worry about a monthly payment. You know how good it feels to be rid of an annoyance like a bill. Consider that emotion on a far wider scale. Most people's highest debt is usually their mortgage. Similarly, mortgage debt is one of the most significant impediments most individuals have to realizing their actual financial potential, since it often promotes the pattern of deficit spending. Early mortgage repayment might be a wise financial decision. It is, however, a personal financial choice that can be analyzed and judged only if you have a solid financial education. Most people believe that financial literacy is something that you are born with. In truth, it is a talent that can be mastered if one so desires. If you like this video, don't forget to like and subscribe to the channel. At number 5 is financial flexibility. The largest advantage of paying off your mortgage is the financial freedom it affords in terms of possibilities. Because you are no longer paying mortgage payments, you have greater control over your monthly budget. A mortgage is a long-term obligation with several costs in addition to the interest payments. This debt may be a big financial burden that takes years to pay off, costing you tens of thousands of dollars in interest. It is critical to pay off your mortgage as soon as possible if you want to retire early. Paying off your mortgage enhances your capacity to save, invest, and enjoy the results of your efforts regardless of whether you are currently financially independent or on your way to being one. So not having mortgage debt allows you to concentrate on growing wealth. When you are debt-free, you may work fewer hours while maintaining your existing lifestyle. Keep working the same number of hours to speed up your investment, or look into other jobs that give you more satisfaction, meaning, or purpose. The number 6 is saving and investing. In addition, once your mortgage is closed, you will have additional cash to save and invest for the future. Paying off your home is a monumental accomplishment that allows you to dramatically increase your rate of saving and investing. In addition to growing your net worth, the additional cash flow can be turned into passive income to support your desired lifestyle. Focusing on saving and investing as opposed to debt repayment will transform your financial thinking as you are actively making financial decisions for your future versus paying for the mistakes of your past. In addition, your mind will adjust to seeking growth and income opportunities independent of an employer when combined with the self-discipline and delayed gratification required to pay off the mortgage. A safe location to reside is number 7. By removing housing expenses as a barrier to retirement, paying off your mortgage greatly enhances your future lodging and economic stability. Having a paid-off home, for example, considerably lessens the obstacles of finding a place to live. For example, the option to give lodging utilities and use of property facilities such as a pool as part of the remuneration package might ease a decision to retire in place versus assisted living. House hacking via bringing in roommates, holiday rentals, or full property rentals are all examples of ways to fund other bills. Aside from the comfort of owning a house, homeowners who don't have a mortgage are better off financially than renters because property taxes, insurance, and maintenance costs tend to rise more slowly than rent increases. Economic resilience is number 8. According to the U.S. Economic Development Administration, paying off your mortgage enhances your economic resilience. The capacity of an organization to avoid, tolerate, or swiftly recover from substantial disruptions such as shocks to its economic or revenue basis is referred to as resilience. The government maintains that economic resilience consists of 3 fundamental characteristics. Number 1 is the ability to recover quickly from a shock. Number 2 is the ability to tolerate a shock. And number 3 is the ability to avoid the shock entirely. Following the worldwide pandemic of 2020, the ability to prevent, survive, and recover from economic shocks is ever present. Lowering living expenses and income needs, for example, increases the capacity to endure income reductions or losses by relying on savings just as it does in recovery. At the time this video was made, millions of homeowners in the United States were behind on their mortgage payments by thousands of dollars. They may not be able to catch up, which could lead to foreclosure or more debt in the long run. Thank you for watching. I hope you have learned something from this video. If you like this video, do give us a like, subscribe to the channel, and comment down below. Thank you and goodbye.